This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Britain will allow some new oil and gas production on or near existing fields, the government said on Wednesday, easing its stance on new licenses while dashing oil and gas producers' hopes for an early end to windfall taxes on their sector. From an output of around 4.4 million barrels of oil equivalent per day, BOD, similar to OPEC heavyweight Iraq, at the start of the new millennium and a position as a net exporter, Britain now produces around 1 million BOD, with a decline to under 150,000 BOD seen by 2050, according to UK oil and gas regulator North Sea Transition Authority. US President Donald Trump has been outspoken in his criticism of the UK's energy policy and efforts to reach net zero greenhouse gas emissions by 2050.
Oil prices steadied on Thursday as market participants weighed talks to end the war in Ukraine against the impact of Western sanctions against Russian supply, though trading was set to remain thin due to the US Thanksgiving holiday. Brent crude futures rose 5 cents or 0.1% to stand at $63.18 a barrel at 13:03 GMT, while US West Texas Intermediate crude futures gained 16 cents or 0.3% to $58.81 a barrel. U.S. envoy Steve Witkoff is set to travel to Moscow next week with other senior U.S. officials for talks with Russian leaders on a possible plan to end the nearly 4-year-old war in Ukraine, the deadliest in Europe since World War II.
Moving on to the top news in the energy sector.
Independent refiners in China have received their first batch of crude oil import quotas for 2026 that can be used for cargoes arriving by the end of the year, trade sources said on Thursday. The release of the fresh quotas is expected to boost crude imports by the world's largest oil importer and ease a supply glut. Among the refiners, Hengley Petrochemical received a quota to import 2 million metric tons, 40,000 barrels per day, of crude, said two of the sources with knowledge of the matter.
U.S. crude stocks climbed as imports rose to an 11-week high, the EIA said on Wednesday, while fuel inventories also increased as refining activity ticked higher. Crude inventories climbed by 2.8 million barrels to 426.9 million barrels in the week ended November 21, the EIA said, compared with analysts' expectations in a Reuters poll for a 55,000-barrel rise. Oil futures were little changed following the report. Global Brent crude futures were trading at $62.34 a barrel, off 14 cents at 10:48 a.m. Eastern Daylight Saving Time, 15:48 GMT, while U.S. West Texas Intermediate crude futures were down 6 cents at $57.91 a barrel. Next, we have the top news in metal markets. Spot platinum prices rose on Thursday as the start of the futures trading on the China's Guangzhou Bourse provided support to the overall liquidity for the metal. The contracts are the first domestic price hedging mechanism for platinum and palladium in the world's second-largest economy, where the metals are used by automakers and other industries, including jewelry and investment products. Spot platinum prices in London were up 1.0% at $1,604 per troy ounce by 12:26 GMT after hitting $1,641, their one-month high. Spot palladium was steady at $1,423.
Chicago soybean futures ticked up on Wednesday as traders eyed Chinese purchases of U.S. beans under a bilateral trade truce and adjusted positions before the U.S. Thanksgiving holiday, analysts said. The oilseed market remained underpinned by indications of Chinese demand, with traders telling Reuters that China bought at least 10 cargoes of U.S. soybeans since Tuesday. That followed a call on Monday between Presidents Donald Trump and Xi Jinping, during which Trump said he had pressed Xi to accelerate and increase China's purchases of U.S. goods. Doubts that China will buy the 12 million metric tons cited by the United States as an agreed target for the end of December kept a lid on the market, however.
We will now look at the top news in the agricultural sector.
Gold prices edged lower on Thursday, easing from a near 2-week high hit in the previous session, while investors assessed the likelihood of a U.S. interest rate cut in December. Spot gold was down 0.2% at $4,156.89 per ounce, as of 12:16 GMT. U.S. gold futures for December delivery slipped 0.2% to $4,154.40 per ounce. We still expect the consolidation that started with the October setback to continue as the dust of that setback has not fully settled yet, said Julius Baer analyst Carsten Menke.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.